tariff restrictions have impacted trade, but not in terms of the quantum, but only in terms of trade lanes. I recall more than 4 years ago, when initial sanctions came in from the Trump administration, we had seen an increased import into our Vietnam offices from China, and we had also seen improved export out of Vietnam as well. And also, likewise, we saw increased momentum in Indonesia, Philippines, and some of these other markets as well. So in my belief, whether it's the short-term tariff sanction or it's a long-term structural trend, trade flows could change in terms of, which origins and destinations we're talking about, but the overall trade flows would remain robust as long as there's manufacturing and consumption and demand is there. And we believe that it's going to be positive with all the initiatives we've been hearing about on the global economy.
What about all the rhetoric around protectionism and onshoring? Would that impact volume flow for logistic companies like yourself?
So if you look at nearshoring, what we're talking about, let's say, step one, if you're bringing manufacturing to Mexico for US, you still have to have the raw materials and components coming in from Asia for many of these products. We're also looking at, even if the manufacturing was to shift over the coming 2-3 years in certain segments into the United States, or let's say we're looking at nearshoring in Europe as well. We are noticing these trends have been there for last almost 5 to 7 years, but they have only changed the trading patterns. We have found opportunities in Latin America, for instance, where we've been growing well as well. We have seen that there's been a greater opportunity on the Southeast Asia as compared to China being the single largest, fastest growing opportunity in the past. So there have been structural trends which have been changing based on the geopolitics and the economic policies across the world. But the underlying trade volume at large remains unaffected. And the advantage that we carry into our business on the international side is our geographic expanse. As the world's largest LCL consolidator, we operate almost 2,400 trade lanes with our own offices in over 65 countries. So basically covered all across.
Ravi, do want to get your sense in broadly on what are you watching out for in 2025 as the big reset for your business, especially at a time when, there's much conjecture around the incoming administration, Trump 2.0 in the US. And obviously that has far-reaching implications for global trade.
Yeah. So if you look at, three businesses that form part of Allcargo, two businesses are entirely focused on India. And we believe that Trump 2.0 would be positive for India. And that would only add to the optimism around the economic growth and consumption in the country, which means there will be an increasing demand for B2B express logistics, which is our business under Allcargo Gati, which is part of the company. We also see continued momentum on the contract logistics side. On the international business as well, about 15 to 20% of our business is India focused. So all these aspects would continue to benefit from the geopolitical landscape, which is evolving as we see around us. And on the remaining 85% of the international business, I personally believe that the changing geopolitical dynamics would only lead to improvement in economic environment. And as a company, we are now focused on very divergent strategies, if I could call that. We have high growth markets like Southeast Asia and India, where we continue to invest in people, infrastructure, and the volume growth has been very good as well. But on the other hand, we have European markets, which are mature markets where we have higher penetration. And in these markets, we are trying to see how we can use technology to reduce costs. How can we bring down our cost base? And therefore, that could help us in bringing down the cost and expanding the gross margins. And then third is what I see as under-penetrated markets for us, markets like Latin America, where we have historically had limited presence, and we believe that there are excellent pockets of opportunities to expand. So overall, I think, we see there are a lot of opportunities for the group. We are very well positioned to benefit from the revived momentum in international trade, and we stand to benefit from the economic development in India as well. So quite optimistic overall.